Hello everyone. Let us discuss today how we can start investing and which one to choose, index fund or direct stocks. In this video, you will get to know that investing with index fund is better or investing directly with stock is better, right? So let's start. So uh, this is the most critical question to a beginner or someone who is starting their investing journey, that how we can start investing. When I started investing, I started directly with stocks. How we start investing, we influence with the friends, family members, or someone who is um, already invested with the stocks, or they already started their investing journey. So we are influenced from them, or we have seen someone who has gained some profit into these stocks. So in this video we are going to discuss complete details about investing in stock is better or investing into the index fund is better, and why it is better, with the examples how I started my journey. If you are new here, I am Vikas, a former private banker, and I am on a mission to become a financial free. So let's start. So when it comes to the investment, it's always difficult to choose how to start. The stock market, about researching for stocks, individual stocks, it is not everyone's task. There are particular teams in brokerage departments in different investment firms which guide you. They time to time generate different reports about the stocks, and it is always complicated to do complete research by ourselves. So first of all, let us understand what is stocks. Stocks are very simple. When a company needs cash to grow their business, they issue common shares, and shareholders like us, if we buy the shares of that company, so we become shareholder in that company. So a small portion of any company, say Apple is there, Microsoft is there, Tesla is there, so they all company, in order to grow their business, they issue shares in the market. And those shares, the fraction of shares, you can take an example of an pizza. If there is one pizza, consider this one pizza as a company. There is a one slice, you get one slice of that pizza, that is your part. So similar story is with the stocks. So the companies, they raise capitals, they issue the shares into the market in order to grow their business, and simply this is called stocks. Investing into the stocks are always riskier. This is not the financial advice. Again, I'm telling you, I'm not a financial advisor, and please consult your registered financial advisor before investing in any stocks or any index funds. On this channel, this is all the information is for educational purpose only. Okay, so we were discussing about the stocks. So stocks are very simple. A company who wants to grow their business, they issue shares to the market, and when we buy those shares, we own a portion of that company. This is called stocks. This is called investing in stocks. But there is a problem. If we are investing directly into the stocks, company can go bankrupt because the risk is higher. There may be a problem in management, there may be a financial issue, there may be something competition issue. So we cannot completely rely until unless we have done a complete research about the company, that okay, this company is going to do very well in near future. So we have done our extensive research, on that company, and we are confident to invest into that company, because there is lots of research we need to do before investing into any particular stock, one stock. So companies like Nokia, Blackberries, they were well-known companies at their times, but now there is no Nokia, no Blackberry. So they are struggling with their existence as well. So always remember, investing into direct stocks is always riskier until unless you have not done your extensive research and you are not ready to take that level of risk with your investments. So what is the other option to start with? The second option, which is index investing or index fund investing. Generally, in today's term, we call it ETF, exchange traded funds. So I don't want to make it very complicated that what is exchange traded funds, what is index funds. Take an example, another example of the same pizza. If there are lots of pizza, lots of companies, which is representing a country or a sector, say for example in US, S&P 500 is there, Nasdaq is there. So Nasdaq is representing top 100 companies of the USA. Companies like Tesla, Apple, Microsoft, Meta, Google, Nvidia. So these Google and these companies are also included into the S&P 500 and Nasdaq 100. So the most famous index tracks S&P 500 is the top 500 companies from the US. Top 500 companies from the US. Companies which I have just taken the names, they are also into that index. So how we can start investing into index funds or stocks? That is very simple. You have the brokerage account and you can directly open a brokerage account, fund your account and start investing into those funds. But investing into the direct stock compared to the index funds, which is better? So index fund, as I have mentioned that, okay, so when you are buying an index fund, you are not betting on a particular one company or one stock, you are betting on overall economy. For example, S&P 500, it is representing the US economy. If there are 500 companies, out of 500, if 50 company fails, 450 companies are there to back you up. Okay, so it is not like you are individually investing into one company and you have the higher risk into investing into the index funds. So let me give you my example, how I started. I started back in 2021 investing into the US markets. In 2021, I started with some random stock. It came in my picture. It was Mullen Automotive. It was at that time a rival of Tesla. So I thought the stock will go up. I heard someone saying this Mullen Automotive will go up. So I bought 100 shares of Mullen Automotive at that time. And after that, few days it went up, and later on it started going down, down, down and down. And at the end, the stock is now nowhere, delisted from the exchange. I lost almost 36 to 37% in particular that stock. Now, another example. I started in 2023. It was just a guess. I thought, let's just start investing. What is index fund? How I can start investing into that? So I bought one piece of TQQQ. It is the leveraged ETF issued by the iShare. It is QQQ, so 3-time leverage ETF. So we will come later on onto these leveraged ETFs. So particularly what I did, I just bought for just to see how it works. So you know, in last 3 years, it has given 800% return. 800%. Imagine, instead of buying one ETF, I would have bought shares worth of just $1,000. It would have become $8,000, and top of that, the company has issued some dividends also in last 2 years. So this is the magic of investing into the index fund. Another example I want to highlight here, Warren Buffett, the Oracle of Omaha. The world consider him is the most powerful visionary stock investor, and he's the greatest investor alive, made a public bet. He said, I will bet on $1 million that a simple S&P 500 index fund will beat any group of hedge fund over 10 years. A fund manager took the bet. He chose the 5 best hedge funds he could find. 10 years later, in 2018, 5 elite hedge funds results were, they have generated 36.3% return, while the index fund which Buffett has chosen has given 125.8% in 10 years. So Buffett donated his winnings to charity and then said something I want you to remember. For most investors, a low-cost index fund is the best thing they can own. Not because picking stock is impossible, but because it is extraordinarily hard, and most of the time, for most people, the index fund beats the stock picker, including the professionals. There are another reason why index funds always do better, that because of their nature of cost effectiveness. They are very cost effective if you compare with the hedge funds industry. So the index fund will cost you hardly 0.03%. They have the expense ratio year on year basis. So here is your catch. Looking at these 3 stories, how I bought the stocks and how I lost, how I invested in the index fund and where my index fund is currently, how my portfolio is performing. And third one, when we take the example and advice from Warren Buffett himself, he has mentioned. So looking at overall scenario, investing into index fund as a beginner is always better. If you don't understand any industry, particularly if you are suppose from tech industry, or you are from healthcare industry, or you are from FMCG industry, or you are from some energy sectors or some semiconductor industry, you have your area of comfort, that I am comfortable investing into the semiconductor industry, I am comfortable investing into the tech industry. So there are particular ETFs available to invest into those sectors as well. Here are the list of ETFs which is available industry wise. You can go and check their historical return, and you can also start investing into the index funds. Why I am emphasizing index funds as a most? Because index fund will give you peace of mind. I myself have a significant portion of my investing into the index funds. It is not because I don't want to give a time or I don't have knowledge of stocks picking. I am a technical analyst and I pick stocks based on technicals, and there are few fundamentals also I consider. However, whatever we are doing, we need to generate good returns which can be significant when it comes to the when we will be able to beat the inflation. Understood? So here is your homework today. I want you to just go through the list of these index funds. So there are few companies which I personally believe and which are good ETFs available. One is iShare and Vanguard. So Triple Q, SPY, these all are index funds available. If you are good in stock picking, you have good fundamental analytical skills, you have good technical analytical skills, then you can go ahead with stock picking, and that is the best strategy which all the veteran investors are following. However, if you are a beginner, you don't know how to start your investing, just go with the index funds and start investing into the ETFs. All right. Again, in this video, whatever I have mentioned, there is no financial advice, and this is just for education purpose. So keep this thing in your mind. Before considering any investment, please consult with your registered investment advisor. So here we conclude this video. If you like my videos, please do subscribe, share, and spread the word. And again, your homework is, you need to tell in this comment that how you are investing. If you have already started your investing journey, you are investing in stocks or ETFs or index funds, or if you are starting as a beginner to invest your money, so where you are planning to put your money in. I am Vikas, this is Break Free, and the financial freedom's journey start now. Thank you.